Hello, everybody. It's Mark Johnson, and want to welcome you to this week's rate review here. Basically, as I told you last week, we saw interest rates come down this week. They were at 6.96. They came down an eighth of a percent to 6.78. And that's a good sign for interest rates. This week, we've got just a lot of things happening. The bond market is pretty much flat. We'll get into some charts in a minute, but also the stocks are just soaring. They're like really close to an all-time high. So with that, we've got a lot of action-packed events happening this week that could move the market. This Wednesday, the Federal Reserve is going to meet. We pretty much figure that they're going to raise interest rates at least 0.25%. Now, some of the Fed members are saying they're going to raise interest rates maybe, twice this August and then, or excuse me, July, and then maybe in August or September. So we'll just kind of have to watch for that here. One of the things that's just kind of interesting too is that, and I'll share the charts with you. Let's go look at. Let me share my screen with you here. So basically, what we're looking at right now is you'll notice that right here we've pretty much been flat this week, and so bonds were really low, which means rates were really high. When bonds are weak, interest rates go up, and vice versa. So I just want to tie that in here because this is directly influencing our current interest rates. So you can see that for the last 3 days, they've been, a little bit lower. The first 3 days, so in other words, Thursday of a week ago before last, and then Friday, and then all this week here, we've seen that, Monday, Tuesday, Thursday, things have just kind of stayed in this really tight trading range. If you look at that, let's go ahead and look at the 10-year treasuries right now. Let me just click on that, and you'll be able to see what the 10-year treasuries are. It's kind of more indicative of what interest rates have been doing. Again, it's been in this really tight range. Now, what do I think is going to happen, during the next week? Well, like I said, we're probably going to have some pretty good inflation numbers here. We've already had that, but on Friday we got PCE, which is the producer. Let's see, that's called the the personal consumption expenditure. So the Fed really looks at that to see, how we're doing as consumers as far as our spending. And I don't know what the consensus is going to be there. It seems like there's still a lot of spending, but I think people are starting to look at their budgets and saying, hey, we cannot afford to spend this much or put this much on credit. The other thing that's interesting is last week, the Realtor Confidence Index came out, and it's showing that, homes that are sold over bid is up from 3.3% to like 3.5%. And that's the highest since May of 22. The other thing is the percentage of homes sold over asking price is up from 31% to 33%. And that's the highest since July of 2022. And then the number of homes that are selling in less than 1 month is up to 76% now. So it shows that our even though rates are really high, people are still, buying homes. And that should be an indicator to you that if you can find the right home at the right price today, you're going to be happy, even though your rates are going to be higher than what you wanted. You'll be able to refinance those down, but the home prices are still going to continue to increase. So again, we've got basically on Wednesday, the Fed's going to come out with their numbers. That could really change the landscape of interest rates depending on what their bias is. If their bias is like we're starting to see a change there, I think you're going to see rates come down a little bit this week. If they say, hey, we're still seeing a poor inflation numbers and things like that, which I don't think they're going to come out and say, then interest rates could go up. So my advice to you right now is if you're going to not lock in, carefully float and make sure that the lender you're working with is watching the market so that you know whether you should lock in or not come Wednesday or Thursday. Again, I always say lock right now. You're going to be better off in the long run. Hope this helps. If you have any questions, don't hesitate to DM me or give me a call. Also, if you like this video, please share it, and on whatever platform you're on, like and subscribe. All right. Thanks so much. Have a great day.